Cameco stock has nearly doubled in the last year, and investors are wondering, can Cameco stock continue to move up? Actually, I'm not even sure that most investors even realize how big this could get. My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. And that's a good thing because it means I'm not here to sell you some fancy annuity. No, I'm here to break down the numbers that Wall Street glosses over. And here's the deal. Cameco controls some of the richest uranium mines on the planet. I'm talking ore grades 100 times better than the competition. And while most people only see them as a miner, they're quietly expanding into nuclear tech and services worldwide. The stock, it's already up 90% in the last 12 months. And that begs the question, is there still upside left, or are retail investors about to get burned chasing this rally? Well, stick with me because I'm going to show you the one signal that I'm watching that could decide if Cameco's run is just getting started or about to stall out. So let's get into it. Cameco Corporation is a Canadian uranium company that controls a huge portion of the nuclear fuel supply chain. They mine uranium and process it into reactor fuels. Cameco also operates in Kazakhstan. They're a country that provides roughly 40% of the world's uranium. So Cameco isn't just another miner, it's a global player at the center of the world's nuclear supply chain. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/Ricko to get your 10 stock picks right now. In Canada, the company owns the Cigar Lake mine in Saskatchewan, which is right in the middle of the country. And there, they produce uranium that's literally 100 times richer than the average. And when a miner has that kind of grade advantage, it means margins that the competition, well, they can only dream of. Now, at the Cigar Lake mine, the uranium that they find there has a 20% concentration, which means a massive cost advantage for the company. But apart from mining and processing uranium, the company has also started designing and servicing nuclear reactors worldwide, which means stable service revenue alongside mining operations. And that shift matters because when commodity prices swing, services, well, they keep the cash flow steady. Now, with that out of the way, let's talk about the stock. If you'd like to follow along, go ahead and scan this QR code. At the time of recording, Cameco stock trades at $75.55 a share. And if you started a position a year ago, well, I think you'd be very happy right now. The stock has gone up 47% year to date and increased about 90% over the last 12 months. So in just a year, the stock, well, has nearly doubled, and there's a good reason for that. But here's the real question. Is that growth sustainable or just a commodity-driven spike? Over the last year, Cameco's stock has traded between $35 and $80.32. And that's a massive swing for sure. But you need to consider that commodity stocks like this often move with the price of the commodity itself. In Cameco's case, it's uranium, and uranium prices can be very volatile. But what exactly is driving the stock's performance? Well, the world can't produce enough uranium right now, and it's been like that for years. According to industry insiders, nuclear reactors globally consume almost 70,000 tons of uranium every single year, but the mines, they can only produce about 50,000 tons. That 20,000 ton gap is a structural shortage, and shortages, well, they drive prices higher, and the stocks move in line. Basically, there's been a continuous demand for uranium that's been pushing the stock even higher. All right, so let's talk about the company's financials. For the second quarter of this year, Cameco's revenue jumped 45%, which means the company is either selling uranium at higher prices or delivering more volume to its customers, or both. Either way, I think it's a very good sign. Gross profit also rose 43% to $248.4 million, keeping pace with revenue. Meanwhile, operating income surged 61% to around $120 million. And this is interesting. When operating profit grows faster than revenue, it means that operations are becoming more efficient. And this is one of the good things that you'd want to see as an investor. But it's the bottom line that I think you'll find really jumps out right here. The company's net income for the quarter skyrocketed 782% to $232 million. And that's some massive growth. But we also need to consider that last year's numbers were really low. If you zoom out a little, the company's recent annual figures are equally impressive. Full-year revenue rose 19.4% to around $2.29 billion, while operating income went up 77% to $373 million. But net income, it actually fell 53% to $125.4 million. So the picture is strong revenue growth and operating growth, but profits, they're volatile. Classic commodity business behavior, right? All right, so let's talk about the notable tailwinds that investors should focus on. And this is something that we often discuss in my Discord server. Here's why the next decade could be the nuclear's golden age. And Cameco, I think they're sitting right in the middle of it. The world's finally realizing that you can't hit net zero emissions without nuclear power. Wind and solar, they're great, but they don't work well when wind doesn't blow and the sun doesn't shine. You need reliable, carbon-free power, and nuclear's the only option at scale. Even the US is talking about new nuclear power plants after decades of shunning them. Then there's the AI market, which is a huge potential driver for nuclear energy companies. It's no longer a secret that training these large AI models uses insane amounts of power. Microsoft, for example, they just recently signed a deal to restart 3 Mile Island just to power its own data centers. These AI companies with virtually unlimited money need reliable, clean power 24/7, and right now, nuclear is really the only answer. Small modular reactors are another catalyst. These smaller, safer reactors can go places where traditional big reactors just don't make sense. And guess what? Westinghouse is developing this exact technology, so Cameco's perfectly positioned to benefit. So between clean energy mandates, AI demand, and SMRs, the growth runway here seems massive. That said, what are the potential headwinds surrounding the company? Because no matter how bullish the story looks, every stock has a breaking point. The biggest risk in Cameco's business model is another Fukushima-type event. If a major nuclear accident happens anywhere in the world, Cameco's stock will get hammered regardless of whatever it is that they're doing. The odds of such an event are low, yes, but I don't think it's zero. Another risk factor is the contract situation. The company sells its uranium through long-term contracts signed years ago at lower prices. So even though spot uranium prices increase, they'd still be delivering at those old contract prices. It's going to take time for higher prices to fully reflect in its revenue. Now, if uranium drops lower than contracted prices, the company will benefit from existing contracts. I'm also seeing some risk factors around its newly acquired Westinghouse. Cameco is a mining company, and it bought a nuclear tech and service business, which is a completely different beast. And the question is, can they successfully manage this acquisition? Can they achieve their goal of competing for more business? Well, the jury is still out on this one. So here's the million-dollar question. Is the stock still a buy after increasing 90% in the past year? Because I think this is where most investors get trapped, chasing momentum at the wrong time. Look, at $75, you're not getting in on the ground floor. The easy money, it's already been made. But that doesn't mean the opportunity's over. Traditional valuation metrics are tricky with commodity companies because earnings swing wildly with uranium prices. When uranium's hot, the stock looks cheap. When it's not, it looks expensive. If uranium prices stay where they are or move higher, the stock could likely gap up once again. The supply deficit also isn't going away, and the demand from nuclear facilities, well, I think, is just going to keep growing. The AI power demand story, well, it's just beginning. And this provides a huge growth runway for nuclear energy suppliers. However, these are multi-year trends, not short-term profits. But let's be real. At this point, you'd be buying at elevated levels. If uranium prices pull back a little bit, if nuclear sentiment shifts, if there's any nuclear incident globally, this stock is going to drop hard. You can easily see a pretty big pullback in a bad scenario. And for retail investors, here's my take. If you want uranium exposure, I think Cameco might be your safest bet. It's liquid and established. But size the position correctly. This isn't something you'd probably want to bet the farm on, and it seems right now a little expensive to me. Remember, you're not just investing in a company here, you're investing in an idea that nuclear energy will expand significantly over the coming decades. If you believe in that thesis, Cameco is compelling even after the recent run-up. But if you're skeptical about nuclear's future, then maybe stay away regardless of the valuation. Well, folks, that's my take on Cameco Corporation. What do you think about the company? Are you buying into their vision? Did I forget anything? Let me know in the comments below. And while you're there, if you found this video helpful, don't forget to like and subscribe so others will find it as well. Thank you so much for watching, and I'll see you next time.